Sir. Thank you, Stephen, for recording. Has Ashika joined? Not yet. Yeah, I could see she's there.
Venugopal.
Good afternoon. All right. So it's 3. I think we should start. And some of the participants, if you're joining late, don't worry. The recording would be available. It will be shared after we, maybe a couple of days later. Okay. Firstly, is my voice loud and clear? If yes, can you put it as yes in the chat, everyone? Okay, perfect. Yeah, so I welcome all of you for our monthly sessions, and it's like it is definitely a privilege to take up the regular readings, and I always strongly believe in having a regular readings of what is it we need to take back as a learning, is we keep forgetting. Well, the first and foremost thing which I have to say is we keep forgetting, and that is where every month we've been doing this, and this is 68th reading session. The only point which I always tell the participants is, no matter how many times you have heard the statement, that's okay, because most of the participants attending here, they're all finance professionals, and you deal GST is one another aspect to you. And like for me, I only deal in GST and technology. So it's very important that to get clarified certain points. Like even today, we had the GST council meeting, and there were 15 items of the agenda was taken. I think around 8 were discussed, and certain threshold limits got increased. Again, one more new entry in RCM. Changes like this keep happening. It's very important that we get updated of those, and we also see how does it impact our business, because 17, 18 odd GST audits are happening now, and 17, 18 way back then, every professional, like including me, I would have said avail an ITC if you're fulfilling conditions under section 16, even though other person has not reported it in their GSTR 2. I said, like, we can fight it. Of course, even today I say that we can fight it. Only starting from this financial year, of course, we are at the fag end of 22, 1st Jan 22 onwards, where the rule 36.4 has become watertight, and the conditions have been brought in linked with GSTR 2B. Otherwise, the input tax credit could have been seamlessly availed. So these are the kind of a minute things where one should be really be aware of. Even if we are taking a risk, that risk should be clear, that the risk should be clarified, the risk should be very clear, crystal clear, so that you don't end up with an unknown future liabilities that are coming up. Last session, we had a discussion on GSTR 9. Given that people are aware of GSTR 9, we thought we will get into now on little more on reconciliation. Might be most of you are about to file your R9, or some of you would have filed. But what are the key points that you should be checking? I will be calling this as validation points, and some tips and tricks as to how we can simplify our life. In fact, in today's session, I'll be sharing with you a couple of Excel files, which will also help us in, if Tally as an accounting software, which will help us in streamlining the data extraction and reconciliation, right? That's what we are going to do. Feel free to ask questions that you get as and when go. With me, I have my colleagues Jagadeesh and Ashika, who would also be taking along the sessions, and I'm there through and through, so that you can ask the questions. I'll be muting you in the interest of the time. Everyone will get muted, but you can put your questions in the chat box. Yeah. So on this note, let us begin the session. Ashika and Jagadeesh, can you start?
Yes, sir.
Just a second, we'll share my screen.
Yeah.
Yeah. It cover. Yeah, is my screen visible?
Yeah.
Yeah. Okay. The agenda of today's session is basic understanding of GSTR 9 and 9C and tips and tricks in simplifying GSTR 9 preparation and validation key checks before filing of the GST annual returns. And tech part would be taken up by Venu sir. So I will discuss on turnover part of GSTR 9 and 9C. So first we'll discuss the legal provision. As per section 44, every registered person is required to file the annual return along with the self-certified reconciliation statement. Earlier, this reconciliation statement is required to be certified by the chartered accountant or the cost accountant. Now that requirement is not there. Now the burden has shifted to the taxpayer only. So that this in such form and manner. We'll see what is such form and manner. GSTR 9 is the form for the regular taxpayer and GSTR 9A for the composition dealer. As of now, GSTR 9A is not available in the portal. For composition dealer, GSTR 4 is the annual return. And e-commerce operator is required to file the GSTR 9B. But this GSTR 9B is not yet notified. This annual return is not applicable to the input service distributor and the person payable tax under section 5152, that is TDS and TCS, and casual taxable persons and non-resident taxable persons. These people are not required to file the annual return. So, yeah, as discussed, every registered person is required to file the annual return. Every registered person is required to file the annual return. On plain reading of the Act, yes, every registered person is required to file the annual return. But by virtue of various notification, certain persons have been given exception. Let's see who are all those persons. And taxpayer whose aggregate turnover not exceeding 2 crore, for him, both GSTR 9 and 9C is optional. And the taxpayer whose aggregate turnover exceeding 2 crore but not exceeding 5 crore, for him GSTR 9 is mandatory, whereas GSTR 9C is optional. And for the taxpayers whose aggregate turnover exceeding 5 crore, both GSTR 9 and 9C is mandatory. So here the aggregate turnover means section 2 subsection 6 has been defined about the aggregate turnover. Aggregate turnover means PAN-based turnover. We have to see the PAN-based, not individual GST and wise. So due date for filing this annual return is usually the 31st December 2022. So this year we may not expect the extension because for the first 2 years they have given extension because of implementation issues, and next 2 years they have given extension due to the COVID, some other reasons. But this year the situation is good, and we cannot expect the extension. Even income tax return has also not extended. So this year the due date will be 31st December 2022 only. Okay. So what if I not filed my annual return before 31st December 2022? So if I not file the annual return within the due date, as per section 47, late fee will be levied at 200 per day. That is 100 rupees CGST and 100 rupees SGST is required to pay. Maximum cap is 0.5% of the turnover of the state. That is 0.25% of CGST, 0.25% of the SGST. That's the maximum late fee we are required to pay if we not file the annual return within the due date. So let's getting into the anatomy of GSTR 9. So GSTR 9 is totally divided into the 6 parts and 19 tables. So part 1 talks about the basic information that we need to provide the details about the taxpayer details, GST and period of filing. All the details we need to give in the part 1. And part 2 talks about the turnover and the liability. It is further divided into the 2 tables, table 4 and table 5. In table 4, what all the transactions on which there is a tax implication are required to disclose in the table 4, and in table 5, the transactions having no tax implication are required to report in the table 5. Coming to the part 3, input tax credit. After the liability, input tax credit. So this input tax credit is further divided into the three tables: table 6, table 7, and table 8. In table 6, we need to declare the ITC avail, and in table 7, all the whatever the reversal I have been made in the GSTR 3B, I required to declare in the table 7. In table 6 is the gross ITC, and table 7 is my ITC reversal. Table 6 minus 7 is my net ITC, that it will flow to the table 12 of the GSTR 9C. We'll see where it will go in the GSTR 9C in the later slides. So next to the table 8. In table 8, there we need to provide the reconciliation between the GSTR 2A and the ITC avail in the GSTR 3B. So obviously, after liability and the input tax credit, obvious thing is the tax paid. In this, we need to provide the tax payable, and tax paid will be auto-populated. If any difference is there between the tax payable and the tax paid, we need to ascertain the reasons. If any tax payable is coming, then that we need to discuss through DRC 03. That we will discuss in the later part. And coming to the part 5. If any transaction pertaining to 21-22 is reported in the subsequent year, that is 22-23, are required to report in the table 10 to 14. How to report and all that we will discuss in the later slides in detail. And coming to the part 6, it is the other information. Most of the tables in this part are optional except table 17, that is outward HSN. From this year, we need to mandatorily report the HSNY details of outward supply in table 17, whereas HSN of inward is still optional for this year, 21-22. Now, would you like to add anything, sir, here?
Nothing at this point. We can proceed. The only thing, given that you have invited me, for the next part of the discussions, participants, we will be using the table numbers. So just make sure that you have this information or screen handy, or just download a simple format of GSTR 9, and so that we can get into the discussions. We are going to discuss on when a value goes into each of the table, how important that value is. That is what we are going to focus today. So it's more important that you understand those table numbers. You can proceed, Jagadeesh.
Yeah. Now we'll see the parts in the GSTR 9C. So GSTR 9C divided into total 5 parts and into the 16 tables. Part 1, always we need, part 1 always talks about the basic information. So part 2 is about the turnover. Here we need to, in part 2, they further divided into the 4 tables, table 5, 6, 7, and 8. And table 5 and 6 talks about the reconciliation of turnover between the audited financials and the turnover reported in the GSTR 9. And in the table 6, if any difference between the audited financials and GSTR 9, then we need to provide a reason for difference in the table 6. And table 7, it's a reconciliation between the taxable turnover and the adjusted total turnover. And the differences we need to provide in the table 8. Now, part 3, it is the tax payable thing. Here in table 9, we need to provide the rate-wise bifurcation of the taxable turnover that we report in the table 7. And next part is table 4, input tax credit. It is further divided into table 12 to 16. Table 12 is the reconciliation of the input tax credit as per audited financials and the input tax credit available in the GSTR 9. And part 5, that if any additional liability is there, that we need to report in that part 5. Now, we'll see how to report the data in the table, how data will flow between GSTR 9 and 9C, how to report the turnover part in the GSTR 9. So, now see, what is the source of information for filing GSTR 9 or 9C? The preliminary information, source of information.
1 minute, Jagadeesh. So before going to the source, I wanted to explain them the context of GSTR 9 and 9C. Okay, let me just bring this discussion once. The friends, you need to definitely know the context in which one has to prepare GSTR 9 and 9C. And according to me, this slide is very important because GSTR 9 talks about what you have done. GSTR 9C talks about what you should be doing it. So 9 is statement of fact of between GSTR 1, 3B, what you have done, it's a statement of fact of what you have done. For example, when it comes to the turnover, what is reported in GSTR 9 is the turnover on which the tax is paid. The GSTR 9 will capture the turnover on which the tax is being paid. If you did not pay the taxes, it will not find a place in GSTR 9. On the contrary, GSTR 9C is about the turnover on which the tax is payable, because these two contexts are very important as we go along with the other slides. In GSTR 9, we just give the exemptions that we have availed as exemptions. We have treated as exemptions, which we are not paying tax, would be reported. While 9C, of course, earlier 9C was the role of the auditor. So the expectation was whether they are really an exemption. Now, the SSE might have claimed it as an exemption, but whether they are really an exemption is what contemplated in 9C. Now, given that now both are being prepared by the taxpayer, both exemptions in 9 and 9C would be matching. However, you got to be very careful. There is a removal of this word, to the best of information available with me. So that disclaimer is now removed in 9C. That means it is going to be true and correct. It is not a true or fair value. What is disclosed in GSTR 9 is the tax that you have paid. It could have been paid through 3B or DRC 03. But in 9C, what is the tax that you should be paying? In 9, you will be showing the rate of tax as you have segregated in R1, but you in 9. But in 9C, you have to go to the HSN entry. If there are changes in rate of taxes during the period, you got to adopt that. In 9, you will say that I have availed so much ITC. But in 9C, whether that is available in the books or not, you're going to do a reconciliation. In 9, this is my net availment after reversal. But in 9C, what is being discussed is out of so much credit which is available, is it eligible or not? Yes, it has been availed, but is it eligible or not is discussed. So the context of both 9 and 9C is little different and very important. So if you understand this context, then each time when the value which is coming in GSTR 9 or 9C, you can easily validate, yes, whether the team, end of the day, it is you have a team who would be doing it. You are just validating whether that is correct or not, but you have to keep this context in the background. Yes, Jagadeesh, you can proceed.
Yes. The primary source for filing GSTR 9 is 9 and 9C is obviously GSTR 1 and GSTR 3B and audited financial statements and GSTR 2B or 2A. So in addition to this, we need GSTR 3B of the subsequent financial year or GSTR 9 of the previous financial year. And if any tax payments have been made through DRC 03. And also that we need to provide the refund details, if any refund details, and if any notices have been received, that all that those details also we need to provide in the table 9, that is under table 16, other information. So why subsequent year GSTR 3B is required? For reporting the spillover transactions in GSTR 9, we may be required this GSTR 3B of the next financial year. And why previous year GSTR 9 is required? To report what are the ITC that have been availed in the previous financial year, current financial relating to the previous, that we need this GSTR 9. So now we'll see how to report the turnover in the GSTR 9. First, we will see the how to report in GSTR, then we will see how to report the turnover in the 9C. So as I discussed, part 2. Part 2 talks about the turnover and the liability. So in the table 4, the transactions having the tax implication is required to report in the table 4. Here, in addition to the turnover, we also need to report the inward supplies on which tax is payable under reversal is also required to report in the table 4. That's why here, instead of the turnover, I mentioned that the transactions having tax implication are required to report in the table 4. In the table 5, I need to report the transactions not having the tax implication. That is exempted turnover, non-GST turnover, or the exports without payment of tax, and all that, and outward RCM supplies. All those supplies are required to report in the table 5. Table 4 talks about the tax implication turnover, and table 5 we need to report the non-tax implication turnover. So this is the table 4. So in table 4, I need to bifurcate the turnover between B2B, B2C, exports with payment, SEZ with payment, and deemed supplies. So, and so the 4G, this also I need to report in the table 4 itself only, because on inward supplies on which I have to pay the tax under reversal, that is 4G, and what are the adjustments? 4I to 4L, I need to provide in 4I to 4L. Earlier, 4I to 4L is optional. Earlier, we have an option to disclose the figures net of in the 4B to 4E itself. But from now 21-22 onwards, we need to disclose the credit notes and the amendments separately from the 4I to 4L. We are not allowed to set off in 4B to 4D. Whereas for B2C supplies, we are allowed to show the disclose the net of figure. Now coming to the what is the turnover 5 and see the 5. See here, this we can show it as a net of figure B2C, but from B to D, we need to see the gross figures and any credit note or debit note or amendments that we need to disclose separately here. This we can net of figure. So this is the table 5. Here we need to report all the transactions on which there is no tax implication are required to report in the table 5. That is the zero rated supplies made without payment of tax, exempted, nil rated, and non-GST supplies. Earlier we have an option to disclose exempted, nil rated, and non-GST in the exempted itself. But from 21-22 onwards, non-GST supplies are required to report separately, whereas exempted and nil rated, we can club it and disclose it in the exempted turnover, exempted field. Unlike the table 4, in table 5, we have an option to disclose the figures from table 5, net off of credit notes and debit notes. Whereas in table 4, you are required to report it separately. But here you can disclose it net off in the here itself from table A to F.
Yeah,
So,
can I just want to add one point for the table 4, again for the benefit of the members. See, members, the table 4 is the crucial table for the values that gets reported in GSTR 9. And why do I say crucial? Because one portion of it is the turnover. This you can match it with your books of accounts. You can see whether this credit, this turnover is available in the books. And right now, I am with table 4. We now know it is only a taxable turnover. Okay. The word, when we say taxable, it doesn't mean the definition of taxable as per section 2. It is where there is a, as Jagadeesh said, where the transactions have tax liability. Even exports is a taxable turnover. Supply to SEZ is also taxable, but they're zero rated. So wherever there is a tax liability, so they have classified as B2C, B2B, exports with payment, SEZ with payment, and deemed exports. So which means 4A to 4E is what you will be reporting your turnover. On top of the turnover, if you have advances received for services, even this is a liability. Here, you will have a possibility of a negative item. I have received advance in financial year 2021. I have paid the taxes in 2021, which I have raised an invoice in 21-22. In 21-22, I have invoice, but I will not have any tax liability. Hypothetically, let's say I have only one invoice, one transaction. So in 2021, I have already discharged the turnover. So in 21-22, when I raise an invoice, I'll be reporting under 4B and I'll be reporting a negative value and 4F, with which it will make it offset. This is my turnover related liability, but there is an inward which will also be attracted under RCM. So the RCM is captured under 4G. So remember these two tables, 4F and 4G, because we'll be again cross verifying at the end. What Jagadeesh was mentioning is mandatory reporting, which earlier these were given as exemption or relaxation. Now it is no longer relaxed. So your 4I, which is credit notes, 4J debit notes, 4K amendment upward and 4L amendment downward, this is mandatory. Now, how do you know that the adjustment is permitted or not? Section 34 says if you are issuing a credit note, that should be reported in R1. So if you are not issuing a credit note in R1, then, and you are adjusting directly in 3B. So technically it will not be a valid credit note and it will be questioned by the department authorities. So you got to borrow the values in 4I directly from your GSTR 1. So it is very important that you issue and report the credit note. That is why in the second half in the tech tip, I'll explain you how do we figure out we get these details, because we clearly know if you have a bad debt, bad debts are not permitted. Bad debts are not a permitted credits. If you have any inability to collect money from the customer, you cannot pass on your inability to the government and say, I will reduce my liability. So GST credit note can be issued only section 34 when the goods have been received or rejected. If there is a deficiency in the quality, only in those situations, you can raise a credit note. Yeah. Yes.
Yes. Now coming to the 9C. Before going into the 9C, what we have to do? So here 9C, for each GSTN we required to file. So if I have the financial statement, if I'm, let's say I'm having 3 registration in 3 states, but my financials are showing the consolidated one. What I have to do is, I have to bifurcate the turnover for each GSTN wise, because 9C is required to file for each GSTN. So I will arrive the turnover for each GSTN wise, and then we'll do the reconciliation with the turnover reported in the GSTR returns. So this is the table 5 of the GSTR 9C. In table 5A, I require to report the turnover as per the audited financial statements. That is the turnover that arrived for this GSTN. I require to report here. So have to make the adjustment for all these table, unbilled revenue, unadjusted advances, and credit debit notes, and all the adjustments have to made to this audited financial statements turnover. Then I will arrive the adjusted turnover. That adjusted turnover I will reconcile with the turnover I reported in the GSTR, because the turnover reported in the financial statement prepared as per the applicable GAAP, but whereas the turnover in GST will be prepared based upon the time of the supply and various valuation rules. So after doing all this adjustment, if any difference I'm getting between the adjusted turnover and the turnover reported in the GSTR 9, that I need to ascertain the reason for difference. I need to report in the table 6. From the turnover, adjusted turnover, I need to arrive the taxable turnover in the table 7. So in the table 7, this will auto-populated from the table 5. This is nothing but the table 5P. If you see here, this is the table 5P. This turnover I arrived after making all these adjustments that have been made to the audited financial turnover. Okay. To this turnover, I am remove. What is my objective here? I need to arrive the taxable turnover here. So I will remove the value of exempted, nil rated, or non-GST supplies here. How I will arrive all these figures? I can take these figures from the GSTR 9, provided if I correctly reported all these exempted, all the non-GST supplies correctly in the GSTR 9. Then I can take directly those figures from the GSTR 9. That is table 5D, 5E, 5F of GSTR 9. Those figures I can take it here. And also the same way, zero rated supplies without payment of tax, what I have reported in the table 5 of GSTR 9, that I can take it here. So, and supplies on which tax is to be paid by the recipient on the reversal basis. These are our outward supplies on which recipient is required to pay the tax under reversal. That turnover I required to report in this table 7D. After all these adjustments, I will get the turnover, taxable turnover, because I have removed all the turnover on which there is no tax implication. So table 7 is nothing but the taxable turnover. So already adjustments have been made in table 5. So this is the adjusted taxable turnover. So now I will compare this table 7E with the taxable turnover declared in the table 9. So if any unreconciled, that I need to ascertain the reasons for the unreconciled turnover, that I need to provide in the table 8. So
before we go further, I just want to explain the context of again 9 and 9C. So if you see in GSTR 9, of course, though we didn't deal with the table 10 and 11, my total turnover, like what we said, 5N, where we discussed 5N, my total turnover is taxable plus exempt. Here I'm carefully using the word turnover. So that is where we are eliminating this 4G RCM from the turnover. So my total turnover ideally is there in 5N, right? So when the turnover is in 5N, for the purpose of the GST 9C, okay, which I said the purpose of my GSTR 9C. My purpose of 9C is to arrive the turnover on which the tax is payable and consider the exemption. And this is one classic example which I tell regularly, and I'm sure you might have heard. So when we say my turnover, which means if my liability, if I have to say, my liability is generally people think it as cash to be paid. And what does that mean is the gross liability is always the turnover into rate of tax, and cash to be paid is always gross liability minus ITC. So one has to derive what is gross liability, what is ITC. This is very important that we derive the gross liability and we also derive the ITC. So this gross liability is turnover multiplied by rate of tax. And this is where Jagadeesh was saying your turnover is for the government purpose, you have to derive this turnover and rate of tax. Now, when we say the turnover, now we are asking about taxable turnover, because that is where you will be paying taxes on. And how do you get the taxable turnover? Taxable turnover is always gross turnover minus exemptions. And that is what Jagadeesh was showing you, that there are two tables which were dealing with it. The gross turnover is dealt in table number 5, exemptions is dealt in table number 7. And in 9C, we are attempting to reconcile what should be the right turnover. This is compared with what you have declared. So let me go back to what I have shown. Is this is compared with what is shown. So my gross turnover, which is there in my table number 5, is compared with what I have shown. So 5N is your gross turnover. But what we are interested is in taxable turnover. The taxable turnover is there only in table number 4. It's like it is there only in table number 4, which means it is including advances. It's just that I will exclude RCM from the purpose of computation, the taxable turnover, plus upward and downward, which in a while Jagadeesh will cover. So ideally, there is a distinction between gross turnover and the taxable turnover, which you should be mindful of. Yes, Jagadeesh.
Yes. You see how data turnover data will flow from GSTR 9 to GSTR 9C. As I discussed earlier, in table 4, in table 5, I report the turnover, what I reported in the financial year 21-22. If I make any changes with regard to the turnover pertaining to 21-22 in the 22-23, that is up to the November 22-23, that I need to report in the table 10 and table 11. So from GSTR 9, table 5 and table 5 and means table 4 and table 5 as reduced by the RCM inward RCM supplies. That is my net turnover plus the adjustments that have been made in the subsequent year, that is up to the 30th November of 2022. That adjustments. After that adjustments, I will get the turnover, actual turnover reported in the GSTR 9. So with the turnover, we are attempting to reconcile the turnover as per financial statements and the turnover reported in the GSTR 9. So by that way, we will arrive the turnover as per GSTR 9. So coming to this. Okay. So how supply? How to derive the supply? Supply can be anywhere. Either it could be the credit or the P&L. The obvious thing is that we'll find the supply in the credit side of the P&L account. Either it may be of the debit side of the P&L account. How it can be of debit side of the P&L account? Maybe we may credit to the expense ledger. Maybe possible. That also possible. And the asset side of the balance sheet. On the face of the P&L, we cannot see the sale valuation of the fixed assets. So sale of fixed assets could be found only in the asset side of the balance sheet. Liability side of the balance sheet, all the advances will be booked in the liability side of the balance sheet. From there, we have to pick the supply. Outside of financial statements, like stock transfers, in the consolidated financial statement, all the stock transfers will get knocked off and the net figure will be shown as a sale in the P&L. And Schedule 1 transactions. In financials will contain only financial values, but whereas GST is driven by the time of supply and valuation rules are different as financials are prepared as per the applicable GAAP. So from all these sources, we'll arrive figure for supply.
Couple of points. Go back to so the members. Again, it is very important that when you are finalizing the books of accounts for yourself or the client, just see when we say debit side set off of against expenditure. I was just reviewing one couple of hours back at GSTR 9 computation. In one of the case where the client is dealer of products and the engagement with the customer is, even though it is CIF basis, where the agreement is, I have to deliver the goods to the customer premises. However, my terms and conditions is, see, my responsibility is at the factory X works. You have to pick. But given that you are asking me to deliver it, I will hire a vehicle, a GTA. On an actual basis, I will recover that money. I don't know whether, even though if my product, let's say if I am selling this product, which is, let's say, 100 rupees, the delivery charges is 200 rupees. I don't care. Whatever is the GTA bill, I will give you. Now, since I am hiring the GTA, I will have to pay to the GTA. How will I collect from you? In the invoice, I'll collect from you. So in the invoice, I will be writing 100 rupees as the sale of the product. Hypothetically, let's put as 120 rupees is the delivery charges. Delivery charges 120 rupees, total 220 rupees. The way the client is accounting is, look, my sales is only 100. I don't bother about this GTA delivery charges. When I pay the transportation, I book the transportation cost. And when I'm getting the money from you, in the books of accounts, the voucher is split into two parts. Debit customer for 220 plus GST, credit sales 100, credit transportation charges, which is cost 120 rupees. So ideally, my P&L is showing expenditure is 0 and the sales is 100. But for the purpose of GST, you have to capitalize all the incidental costs. Section 15 read with section 8, where the other costs will be deemed as a composite supply, and you will have to pay taxes on the other values also. So in the books of accounts, you don't have the turnover, but you have to pay tax on it. So this is one area. Again, people will miss out because it is, and whatever which is not there in the books of accounts, you will be missing it out. Second, on the asset side of the balance sheet, which is sale of fixed assets. See, what is available in the P&L account is profit on sale of fixed asset. Again, people try to eliminate that. And incorporate the sale value of the asset. However, when it comes to the motor vehicle, the tax liability is to be discharged on the profit on sale of those assets. And profit on sale of asset is not the profit which you have booked in the books of accounts, because in the books of accounts, you follow Companies Act depreciation. But for the purpose of the GST, you have to follow the depreciation which you claimed under section 32 of the Income Tax Act 1961, right? That is important. Notification 8/2018 says the value over and above this profit is treated as exempt. So this is not wholly exempt. The balance portion is taxed at 18% or 12% basis. If it is an SUV or motor vehicle more than 1200 cc, it is 18%. Other vehicle, it is 12%. So the number one, they don't even consider the sale value of the asset. Mistake number two, in case of motor vehicle, they consider it the sale value as per books and not as per the P&L account. These are as per the income tax, what is the profit. Yeah. Advances, I'm sure every one of you are aware, advances will be paying taxes only on the service income, and no advances are for the goods we don't need to pay. Yeah, please continue.
For preparation of GSTR 9, we have to do the multi-dimensional reconciliation. That is reconciliation between books versus 1 and GSTR 1 versus GSTR 3B. And also the reconciliation for, also we need to bifurcate the turnover between the each GST and wise, and also for the tax type wise and rate wise. And also we need to bifurcate between B2B, B2C, and supply type like zero rated supplies. And in zero rated supplies, we need to bifurcate with payment, without payment. All those report segregation we need to do before starting preparation of GSTR 9 and 9C. So, and also we need to do the reconciliation with the figures reflecting in the GSTR with the income tax. So for supply of goods, we need to do the reconciliation between TCS as declared under section 206 1H in case of turnover exceeding 10 crores and also scrap sales 206. Whether we are declaring the turnover or not, we need to check. And in case of supply of service, we need to cross check with the turnover that is reflecting into 26 years. And also we need to ensure that whether sale of immovable property, how we have disclosed in the GSTR 9. If we not disclose in GSTR 9 as a non-GST supply, the same we need to disclose in the table 5, the non-GST supply. So ensure before filing of the GSTR 9, reconcile your turnover with the income tax also. So we'll look up some issues. So, my actual correct type of tax is CGST and SCST, and the same I mentioned in the invoice also. But while filing the return, I disclose as it is IGST, and I rectify that error in the same financial year. Let's say in the 21-22 itself, I corrected the error. What have to do now in the GSTR 9? So the correction has been happened in the same year, so nothing to do with that. So we need to no need to make any adjustment in table 9. At table 4, we need to report the correct figure, that is CGST and SCST. If I make the correction adjustment in the subsequent year, let's say in 21-22, I report it as an IGST, but corrected in 22-23, that is before the November 30, before filing of the October return only, I have adjusted that in the GSTR 3. How I need to report in the GSTR 9 or 9C. So what I have to do is in the table 10, I will table 11 and 4 adjustment will be made in table 10, 11 and 14. I will report in 21-22, I reported as an CGST and SGST, whereas I corrected in the subsequent data 22-23. So what I will do is in 21-22, that is in the table 4, I will report it as an IGST only. But in table 10, table 10 and 11, I will correct it. In the table 10, I will put the IGST, and in table 11, I will reverse that CGST and SGST. So next to that, what if I not adjusted before the November 30? What I will do is, I will correctly report it in the table 4. Then I will get the difference in the table 9. That is tax payable and the tax paid. The difference now I will pay through the DRC 03. So this is the same case, but here the IGST changed to CGST, SGST, vice versa. So let's take the advance received. In 20, let's say in 21-22, I have received the advance, and for that I have not made any adjustment, but invoice issued. On that invoice also, I have paid the tax again without making any adjustment in the GST 3B. What I have did is, on advance also I have paid the tax. On invoice also, again without adjusting that advance, I have paid the tax. So duplication happened. So what I have to do in the GSTR 9? So what I will do is, in the table 4 itself only, I will report the invoice, create the liability, and will not report any advance received. So what it will do is, what will happen then is, in table 9, I will get the tax paid excess. Tax payable, let's say tax payable is 100, but in the tax paid, it may show 120. The taxes paid, we can claim the refund, can show the GSTR 9 as an evidence that I have paid the excess tax. Then I can go for refund on the excess paid tax. So,
okay. So participants, again, I want to give a couple of things. See, again, why we have to attend the sessions regularly. Maybe from next year, you will not hear this changes. I paid CGST, I reported as CGST as GST in R1 and paid as IGST in 3B or vice versa. You might be all aware, in the previous Finance Act, Section 75 got amended, and they brought in a provision where the liability, if you have declared in GSTR 1, that would also be treated as a liability for the purpose of recovery. and they have brought in such a way that the self-assessment tax is including the liability which you have disclosed in GSTR 1. Now, given these changes which are happening, and the next change they brought in is if you don't file the 3B, you cannot file R1, because there were people who are filing R1 and not filing 3B. Now, in spite of this watertight, again, still they find more issues coming up. So again, interestingly, in this council meeting, they have brought the amendment to Rule 59. So in 59.6 clause D, where now they're bringing is if you are disclosing some turnover in GSTR 1 and liability and not paying in 3B, then you got to give an explanation. So we all know DRC 01 and 1 year. That's what we've been knowing. So now there is a new DRC 03 has been introduced, wherein you give an explanation in the form DRC 01B, saying that why you have not paid or why there was a difference, and then move proceed. So that is where I am saying that the next year you will not see this slide at all. So what is more important, you have to use a tool or a software to have proper reporting. You might think that, see, GSTR 1 is only a turnover. Next month I will correct it. But that next month correction, is another challenge. If it is a B2C, you can correct only once. If it is a B2B, an invoice, you have to select and amend. So there are issues that would be coming up. So with this, we come to the end of the first part, which is on the turnover related. I invite Ashika to take up on input tax credit related. So before Ashika starts, anyone have any questions, anything you would like to ask? You can unmute yourself and ask, or you can put your questions in the chat on the turnover related discussions.
No, sir. As of now, we are clear.
No problem. Good. Yes, Ashika, please go ahead.
So now we will be taking to the second part.
1 moment. Deepika has sent. Yes, Deepika, you can unmute and you can ask the question. Deepak Sonamane. You can put your question in the chat, or yes. Your voice is not audible. No, not audible, sir. For me, sure, not audible. I'm not sure others.
Sir, excuse me.
Yes, sir. Please tell me.
Hello.
Yeah. Please go ahead. Tell me.
Yeah. Sir, you gave an example regarding that other income, transportation charges. Hello.
Yes. Correct.
Yeah. So in that one issue, it happened in one of my office. It happened. So we dispatched the goods. The transportation charges was not decided whether we have to pay or my customer has to pay. So we dispatched the goods and we paid the transportation charges for the safer side. On that, we paid the RCM also. And after 2 months, he told, okay, I'll reimburse you, raise an invoice. And we raised the invoice and he paid back to us. What about the GST implication on that?
Yeah.
Since it has already suffered RCM, can I just mention that GST, transportation charge, reimbursement of transportation charges and get back the money? Or should I pay 18% on that?
It's not 18%. The section 15 subsection 2 clause C says, if you are incurring any additional incidental expenditure, that has to be added to the value of the product. Like if your value of the product is say 5%, your rate of tax for the transportation charges is 5%. If not the value of the product, if the classification of the product, if your product is falling at 28%, then the transportation charges will suffer 28%. So the goods that you are selling would also include that incidental values that you are incurring to make the goods available. Hence, these reimbursements which you are recovering from the customers has to be at the rate of the goods which you are originally supplied, even though it is on actual basis.
And sir, I already have paid that money on RCM. No?
No. You
What?
have, see, RCM is on the purchase transaction. That is, I'm not talking about that. That anyhow you
Okay,
have to
okay.
pay. This is on the sales side.
Okay. Thank you, sir. Thank you.
Yeah, good. Yes, Ashika, please proceed.
So now we will be discussing second part of our GSTR 9, that is input tax credit. Now in GSTR 9, where do we report input tax credit? It's table 6, table 7, table 8. Table 6 deals with input tax credit avail. Table 7 deals with reversal. And table 8 is our reconciliation with GSTR 2A. Similarly, in 9C also, we have to report it under table 12 and table 14. Table 12 is basically a book reconciliation with ITC availed in GSTR 3B. And table 14 is expense wise, we give the description on the item on which we have availed the ITC. Now going forward, one by one, what need to be reported and what step you need to take care in order to ensure that your 99C are in compliance. Plus, if any ITC you have availed which you are not eligible, or if any ITC you missed out to avail, how you should deal with the same. Now, this is about the credit flow, electronic credit ledger. Whenever we file our GSTR 3B, in GST portal, they show 3 ledger: electronic credit ledger, cash ledger, liability ledger. Electronic credit ledger deals with the credit on which basically ITC flow from 2 ways. One, the way we report in GSTR 3B. In table 4, we report what the ITC we are availing and what the ITC we are reversing, and the net ITC go into electronic credit ledger. Similarly, we have ITC 01, ITC 02, TRAN 1 and TRAN 2. For that, there is no need to report in GSTR 3B. On filing of this form, it directly flow into electronic credit ledger. ITC 01 and 02 basically relates to your ITC where there is a transfer of business, merger of business or demerger of business, discontinuation of business. So wherever there is one undertaking is being taken over by another undertaking, we file this ITC. Any amount which is lying in old entity is being transferred to new entity by way of ITC 01 and 02. TRAN 1, TRAN 2. As of now, as we all know, by way of Supreme Court decision, for filing TRAN 1 or to revise TRAN 1, date was extended till 30th November. Many of the SSC, while filing their TRAN 1 in the initial period, due to technical glitches or due to lack of knowledge, have done some or something, either missed out the SSC or did a wrong reporting, were given a chance to rectify it. So any SSC who has opted for that chance and has rectified that TRAN, on basis of that TRAN filing, your electronic credit ledger will get changed. However, the TRAN 1 and TRAN 2, which you have filed in 22-23, will not have any impact in 21-22 99C, which we are going to discuss. Now, as we said, net ITC is a table 6 of GSTR 9, which deals with ITC avail. Then come the table 7, which we report reversal, then the net ITC. Now the net ITC, when we say net ITC, which is eligible and available to be utilized against the output tax liability. So for the purpose of GSTR 9, what my net ITC is showing, and to that net ITC, how much I have utilized will be reported in table 9. Because in table 9, we give what is my total tax payable. Total tax payable, which is total of outward tax plus inward supply on which you are liable to pay under RCM. Total of that tax payable by which you have discharged, means you have may discharge by utilization of ITC. You may also discharge by utilization of cash. So in table 9, we report that. So your 7J, which is the net ITC avail, out of that, how much you have utilized will be reported in table 9. Any ITC which is left means which you haven't utilized. There may be 10 lakh ITC which is available to be utilized against your tax payable. Maybe you might have utilized only 8 lakh. 2 lakhs still lying. That will not nowhere reported in your GSTR 9. It will only part of your electronic credit ledger, which will be keep lying in your electronic credit ledger. So for reconciliation, we do this check is how much we have availed the ITC, less the utilization, then come the closing balance. And that closing balance, which we are saying to be unutilized, that we match with the March, after the March month, GSTR 3B, what is the closing balance on portal it is showing. That should match, because your book reconciliation is very important in terms of ITC also. So that will be reflecting in your electronic credit ledger. But you have to see after March. Most of the people over here do the error, they see on 31st March 2022. But March return we file on 20th April. So you should check with the 20th April. After 20th April, how much is the ITC lying? Then this is all what we are discussing as of now is in relation to reporting only. Then input tax credit, which is there in your 21-22. Now how we will report and in which part. The input tax credit which you have availed in 21-22 will be reported in table 6. And input tax credit which you have availed and reversed in 21-22 will be reported in table 7. The impact of 21-22, which you are carry forwarding in subsequent year, will be reported in table 13 and table 12. Now, table 13 relates to input tax credit, which relate to 21-22, but avail in 22-23. That is required to be reported in table 13. And the reversal which you have made in 22-23 will be reported in table 12. So this is how this give the description how the table of GSTR 3B and GSTR 9 are linked. If you will see, first part is 4A5. 4A5 where we report all other ITC. Means let me start with down. First is 4A4, input service distributor credit. So there is a separate column in table 9 to be reported, that is 6D. Then import of service, which has been reported in your GSTR 3B as per table 4A. Now this GSTR 3B which we are discussing is as per current, the revised format which is there in your GSTR 3B. Even the old format is also same. The only change in GSTR 3B which has been made is only in your table 4B. So 4A is same, what there earlier also and present also. Now, import of service, which is reported in table 4A2, need to be reported in table 6F. There is everything is linked. So the way you are reporting in GSTR 3B should match with GSTR 9. Import of goods, which is reported in 4A1, is reported in 6E. Reverse charge credit means now while discussing, Sir and Jagadeesh said about table 4G, where we furnish our details of inward supply on which we are liable to pay tax under RCM. Now, whatever tax we paid under RCM, we are eligible to claim ITC subject to the condition that it does not fall under block credit. If fall under block credit, then you won't be eligible for ITC. Otherwise, you are eligible for the same. Most of the time, table 4G, inward supply on which you are liable to pay under RCM, will not match or may not match with the ITC detail of reverse charge, which is to be shown in your table 6C, 6D or GSTR 3B or 4A3. Because when we will be discussing RCM, you will come to know there are various services on which though they are asking us to pay under RCM, but ITC of the same is not allowed. Then come the forward credit. When all this 4, after this 4, whatever residual, we say all other ITC which is left, which we report in table 4A5. That is what we report in GSTR 9, 6B plus 6H. In this we report 6B is all other ITC which claim, 6H is reclaim of ITC. Means ITC which you claim, then reverse, and then you are reclaiming. But it's related to the nature of all other ITC not falling in any of this 4. So that need to be reported in this pattern of GSTR 9.
Okay, previous slide. Now, as I said, in the context of the GSTR 9, GSTR 9 is a statement of fact. Let's say the statement of fact, if you have availed the input tax credit of 100 rupees in 3B, what you will be reporting in GSTR 9 is also 100 rupees. Whether right, wrong, ineligible, available in 2A, 2B, all those is immaterial. You have availed, so you will be reporting here. The only possible correction that one can do, or it is possible, is in GSTR 3B, I have erroneously reported. Let's say an example, I have imported the goods. The import value of those goods should have been reported in 4A1. But erroneously, I have looked at the balance which is there in my tally books of accounts. I've just copied, and as usual, I have put everything in 4A5. I've put it in 4A5, which is all other ITC. That credit, while reporting in my GSTR 9, I will not report in my 6B. The credit which is there in 4A5 in 3B, I am not reporting in 6B. I will go ahead and report it under 6E because it is import of goods. So the correction which I am doing in my GSTR 9 is reclassification or the proper presentation of these credits. That is what we are going to do. And we will neither ever report a more credit or a lower credit than what we have actually availed. The net availed credit is 4C. Ideally, your 7J should match with 4C. Of course, there are some edge cases. We will deal with it, but just get this context. Please continue.
So in GSTR 3B, we have 4A where we show ITC avail, 4B where we report reversal, and then come the 4C which we say net ITC we are availing. This net ITC which we are availing should be table 6I of GSTR 9, 6B to 6H, which is a total of 6B to 6H minus table 7 should match with your ITC avail in table 6, reduce the table 7 should match with your GSTR 3B. It may be noted that in your GSTR 9, you can't avail any ITC. Availment of ITC is not permissible. The availment of ITC can be done only through GSTR 3B. No excess ITC you can avail in your GSTR 9. It's only for reporting purpose. Like Sir said, if any error you have done while reporting, means instead of reporting in table 4A5, you reported in 4A3, that or representation correction you can do in table 6 of GSTR 9, but you can't avail what you haven't availed in your GSTR 3B. So, and you should correct your reporting. Why? Because if most of the time, most of you people will be receiving ASMT 10. Department is, means it's like portal is issuing the ASMT 10 based on GSTR 3B versus GSTR 2 like anyway. So if your all other ITC shown in your GSTR 3B is more than your GSTR 2A, the straight away notices are being issued. Now you have to explain. Now that excess availment may be due to wrong reporting. So if while filing GSTR 9, you correct those reporting, you can present it and you can say that there was error which I presented, and you can substantiate with the documents. Like import of goods, you can substantiate with your bills of entry that this were the import of goods I made, but by mistake I have, while filing my GSTR 3B, have reported in all other ITC. So this table 6 help you in reducing that litigation also. Department will definitely going to issue the notice, but that representation correction will help you, because the thing is that when they will issue the notice, Though we are standing on 22, 23, doing 21, 22, when they will be issuing notice after 3 years, 4 years, it's not possible that everything will be remembered. So if this proper working are kept, what happened, why the differences arises, and how you have reported at the time of issuing of ASMT 10, either scrutiny, audit, when the department come, you can give a proper explanation what happened and how you have tried to rectify the same. Now, as we discuss how we need to report the C, now we will discuss how you should, for the purpose of GSTR 9 and 9C, how you should check your input tax credit or your RCM liability. We'll be taking the two together because
Ashika, I'm
both
not able
are
to
on
hear
the
you.
expense.
Ashika, we lost your voice for a while.
Okay, so now is it audible?
Yeah.
Okay. As we discuss how and what things we need to report in GSTR 9 and 9C, now we will discuss how we will drive those figures and what are the checks we should do while filing our GSTR 9 and 9C in relation to input tax credit and RCM. Both we will be taking together because both are on your debit side of your PL, that is on expenses. The first thing when you are doing your GSTR 9C, outward part Jagadeesh has done. Now coming to your expense side, you should divide your expenses into two parts, which are with GST and which are without GST. Expense analysis is important, very important, because even over there, people missed out to determine their RCM liability. And when the department obviously has said it will come after 3 years, 5 years, then that tax liability become into 3, because tax plus interest plus penalty, it become 100% penalty is there. So 100 rupees tax, interest when they come after 3 to 5 years, interest also become 100 and penalty is 100%. So it's becoming into 3 times. So it's better while filing your 990, you take care of all this. If anything need to be paid, any ITC need to be reversed, it's been done at this level so that at least some part of the cost you can reduce. Expense analysis will divide into two parts, which is with GST, without GST. In case of obviously where GST has been charged, you will check whether you are eligible for ITC or not. But even in case of with GST, you should be careful for RCM liability. There may be a case where a service or a category of a goods falling under RCM, but as your supplier has charged GST on it, you have paid the same to your supplier. Just for example, let's take security service. You receive a security service from a non-body corporate. You receive from a ABC. He raised an invoice showing you that this much of tax is payable. You also paid it to the party with tax. Now you will say its tax has been paid. So you will claim the ITC on it. Now what the departments are doing, if they are seeing that there is such type of transaction which is covered under RCM, though you have paid the tax to the party has also filed the return, but audit department are issuing notices for that. They are saying, being a recipient, you were liable to pay tax. Even though you have paid to your supplier, I will not allow. There have been cases has come where they have demanded 2 times. One by saying that on this RCM, you are liable to pay tax, so pay as a recipient. Another, that as you have not discharged your tax under RCM, I will not allow you the ITC. Though in a long way, when you will fight the case at the appeal level, you will definitely going to win, because it's been a revenue neutral case. There is no cost, no loss has happened to the government. But at the first instant, they will go ahead and demand this tax liability. Because the problem is that at lower level, they will not agree. And sometimes amount is so high that even for pre-deposit, good amount of working capital get blocked. So take care of it. If any expenses is there, even though GST has charged, just check whether it's covered under RCM or not. Because if it is covered under RCM, it's better you not pay to your supplier. You discharge yourself and ask your supplier also to change the invoices I'm saying for future course because for past what has been done cannot be undone, but few precaution you can take to make sure that your future liability does not arise. Similarly, when coming to without GST fund, you have to check whether any expenses covered under RCM or not. If it's not covered under RCM, then nothing, because no GST, no liability can be fastened on you. Now, once you have analyzed your expenses, then come which ITC you are fully eligible and which you are not. That you have to done on the basis of the activity or outward supply you are providing. If the outward supply you are providing is fully taxable, obviously full ITC eligible. If it is used even for zero rated means export, supply to SEZ. When it is used for zero rated, then also 100% ITC eligible. However, if it has been used for providing non-taxable supply, no ITC. Exempt, nil rated, no ITC. So only by analyzing the expenses where GST suffered is not only the step, you have to also see whether that expenses are exclusively used for providing taxable service or exclusively used for providing non-taxable service or commonly used for providing taxable or non-taxable service. In this three category, we divide the ITC because which is exclusively used for providing taxable service or goods is fully eligible, 100% ITC you can avail. But which is exclusively used for providing non-taxable or exempt, zero ITC available, no ITC is available to you. Then comes the third type, common ITC. There may be a case where you have both taxable and exempted supply also. In that case, if you have some ITC which is commonly used, like administrative related expense or auditor fee, security expense, which are commonly used, then you are only eligible to a proportion of it, to the proportion, to the extent of it, of the taxable supply. So you have to proportionately calculate your ITC for which you are eligible for it. And all this action you can take now while filing your GSTR 99C. Though you can't avail the ITC, but you can pay the ITC which you have ineligible avail. Now, time limit for filing of for availment of ITC was 30th November, which you might have, most of you may, if any ITC has availed in 2022-23. If you have availed, then you have to report in your table 13. That is part 5 of table 13 of GSTR 9. ITC of 21-22 avail in 22-23, which we discussed in our earlier slide. Another important things which you have to do in the case of input tax credit is matching with your GSTR 2A. Now you will notice I have said 2A, not 2B, because 2A is invoice wise reconciliation, and over here also we are dealing with financial year. So it's better to reconcile with GSTR 2A because it will give you a better picture than GSTR 2B. So while matching with your GSTR 2A, just check all the transaction on which you have availed the ITC is appearing in your GSTR 2A. If it is appearing, no problem, because I think so maximum of you must have received 2A versus 3B notice where they are saying that ITC avail in 3B is more than 2A. And now you have to explain which ITC got mixed. You have to substantiate that you have made the payment to your supplier. You have the invoice copy, you receive the goods, you have to receive services. Even though lower level, they are not listening anything, they are passing the order. But with the subsequent litigation, with the subsequent forward of adjudication proceeding, there are chances when you are at the High Court, based on this ground, your ITC liability may not be fastened. But in today's scenario, in financial year 21-22, from Jan 22, that matching one, it has been made to be, it should actually match with your GSTR 2B. If it does not match with your GSTR 2B, you are not eligible for claiming ITC. So for 21-22, do this reconciliation and check whether it is reflecting in 2A or not. Now, what are the things you can do? Which is match is okay. Which is not matching in 2A, but appearing in books. Now nothing could be done because your 30th November to do the rectification and all has been lapsed. Now what you can do? Now see the amount, how much the amount is involved. If amount involvement is less, you can go and reverse the ITC. But if amount involvement is high, keep the documents properly so that you can litigate the same. The things which are only appearing in portal, then check whether you missed out to avail or whether you have expense off to PL. If you feel that credit is eligible to you, then you can do this shuffling. Like only in books can be shuffled with only in portal, provided that is an eligible credit and you have the base for it. Rule 36.4 we already discussed that it should match with your GSTR 2A. This also I discussed, only in portal, only in books, matching. Reversal of ITC. Now we are discussing about table 7, where we report reversal of ITC. Now reversal can be due to numbers of reasons. Either it may be covered under block credit, or it may be due to payment not made to a party within 180 days, or it may also be due to rule 42 and 43. Now let us take us one by one what can be covered. Block credit. Block credit, as we know, section 17.5 specify the clauses where it says on this item you won't be eligible for ITC. The most common which the people do the error is food and beverage, motor vehicle, insurance, life insurance, health insurance. On that they avail the ITC. You should take care if any type of this transaction are appearing, even though you have availed. While filing GSTR 99C, reverse those ITC, pay through DRC 03 and report in 9C that this ineligible ITC has been reversed. Then payment not made to a supplier within 180 days. Now, this is one of the condition which most of the SSC does not comply. And when the department come for audit, they ask you to reverse the ITC. So if you are having a tracking, see, whatever software you use, you can identify which are your vendor outstanding for more than 180 days. It's better you reverse those ITC and reclaim, because for reclaiming of ITC, there is no limit, no time limit is there. So if any ITC is there of which you haven't, any transaction which you haven't paid to your vendor, you reversed it and reclaim it once you make the payment. Now, this is the ITC reconciliation from the point of view of GSTR 9. Now, we discuss what the net ITC which is available as per GSTR 9. Then table 13 and 12, which we said that it's a ITC of 21-22, the impact of which has been taken in 22-23. So the ITC which I have availed plus the ITC which I am saying that I will avail in the next year, plus minus the ITC which I am saying I have reversed in the next year, should match with your ITC as per books. So this is the reconciliation you should do with your books before filing your GSTR 9 and 9C. So before moving to issue, if anybody have any query on ITC part.
We have not covered the table 8 yet. Maybe after the RCM and table 8, we'll take up the issues, Ashika.
Okay, sir.
Yeah.
These are the few issues which we want to highlight. Is the first few issues and few things which you should do is you should reconcile your ITC between books and GSTR 3B. Then there may be a case which ITC you have availed in written but not reflecting in 2A versus or 2A or 2B. Now, this is a litigation, 2A versus 2A and 3B versus GSTR 3B. It's upon the SSC now to decide. But from Gen 22, it's better you avail the ITC only, which is reflecting in your GSTR 2B. Now, for ITC on import of goods, the basis for availing is bill of entry. So there is a time limit in 16.4, which we discussed, 30th November or date of filing of annual return. But this time limit is not applicable in case of import of goods. So even though if this time limits have lapsed, you will be eligible to avail ITC on import of goods. Now, where there is multiple GSTN, in case of multiple GSTN, you need to be little much careful that sometime what happened while furnishing the GSTN of Punjab may be furnished as Tamil Nadu. So if any of that sort has happened, now time to amend has lapsed. So it's better you reverse those ITC. Now, table 12. Table 12 of 9C is books reconciliation with your GSTR 3. Basically, it's a reconciliation with GSTR 9 about the ITC availed in GSTR 3B. Now, while reconciling with book, there may be a case of short availment, there may be a case of excess availment. If it's a case of short availment, then ITC got lapsed if you haven't availed by 30th November. If it's a case of excess availment, you have to reverse your ITC and pay it to the government. Another scenario which may arise is place of supply error. While checking your books ITC, some of the person directly claim CS claim it, but they don't see which states it's belong. West Bengal SGST may be claimed, though you are residing in Karnataka, you are having your place of business in Karnataka. Then you can't claim West Bengal. Other state SGST or other state CGST cannot be claimed. So that check you should do. So basically in GSTR 2A, we get our supplier GSTN and our place of supply, plus we get what the type of tax charge, ICS. So on a supplier GSTN, just do a check that supplier GSTN, filter it, find out other than 29. Which are other than 29? Most of the case, it should be IGST, but there are some cases where it can be CNS, like hotel industry, where renting of immovable property is there, then it's CNS. And that cases, be careful if place of supply belong to other state and CNS is charged, you won't be eligible for ITC of the same. You should reverse it. Now, input tax credit, we need to also bifurcate, like we were reading about table 6, import of goods, import of service. This is not only the bifurcation, it need to be further divided into 3: input, capital goods, input service. Now this division still optional, but it is advisable you do this division for yourself, because if you are in refund industry, this will be very helpful for refund on capital goods. By mistake, if you have claimed, then it's better you calculate it and reverse it. You pay it to the government back. So this bifurcation is also important because it also give you insight on what you are claiming. And it also help you to check eligibility part. Reversal of ITC, we have already covered. Block credit rule 40 to 43. Rule 40 to 43 basically relates to common ITC. Now, as we are discussing, like some situation may be that IGST claim as CNS claim as I. This can happen. But if it has happened, it's better to rectify. Department is not considering any of this. Though it's a revenue neutral case, but they are asking you to reverse. If you have availed I as CNS, they're asking you to pay CNS. There is no benefit department is providing, or the department is not taking any lenient view. So if any of this you identify, you use table 12 and 13. You say by table 12, I am reversing, and by table 13, I am availing the ITC. In this way, you can correct the mistake of 21, 22. See, biggest advantage of having GSTR 99C with 3B is GSTR 1, though it's an invoice-wise reporting, GSTR 3B is a summary return. So there the way came that you can do your representation error correct, even though your times has lapsed. Now table 12 and 13, like we discussed. Now I am saying I avail IGST, I should avail CNS. Now while reporting in table 12 and 13, I will show table 12, IGST I am reversing, table 13, I am availing CNS. Now department will never come to know about this adjustment, even though I reported, because in GSTR 3B, I am reporting total amount, total of what the ITC I am availing, total of ITC what I am reversing. That's the time you have to utilize this option. And when the department come for audit or scrutiny, you should prepare your document in such a way that even though any error has happened, it has been taken care. Now with the IETC, we will move to RCM. Now RCM has two tables in GSTR 9, table 4G, where we report how much of the taxable value or inward supply we are liable to pay under RCM. And table 6, where we report how much of ITC we are eligible to claim for tax paid under RCM. Now table 6 has a two-part for RCM. One when it is received from registered supplier, one when it is received from unregistered supplier. Now registered supplier, if you are receiving, obviously that person will be filing his GSTR 1 and it will be reflecting in your GSTR 2 or GSTR 3B. For unregistered, you have to make your disclosure. Now, these are the RCM services which are covered. In this, only few you will see we have highlighted, we have kept the box fill, because these are the few which are commonly comes in numbers of entities where they might missed out or it's applicable and they are discharging. GTA, Goods Transport Agency. Now, whoever receive any expenses have incurred in relation to transportation, you are liable to pay under RCM. Now, GTA have been given an option. It was not now, basically is a clarification they have issued that GTA has the option either to go for forward or to go for RCM. Whatever option he exercise, he has to mention in the invoice. You know, in tax invoice, there is one rule you have to mention whether tax is payable under reverse charge, yes or no. So that compliance also GTA has to do. Even if they have opted for forward or RCM, as per latest clarification, they have to also give declaration to the department whether they opted for forward or RCM. So whenever you receive GTA, so it's upon GTA whether they opt for forward or RCM. Make sure he issue your proper invoice and he is mentioning about your liability. You may also pay to him. And the thing is, 1 minute. Akhila lab charger. So whenever you received GTA service, just check for that whether he has written as RCM yes or no, because and declaration he has given or not. Otherwise, even though you are paying to your GTA, you may be liable, you may be asked to pay under RCM. Then come the legal service, advocate fee. If any of you are receiving any expense has been incurred in relation to advocate, make sure RCM is paid. Sponsorship service, service by governments. This is also one of the major area where lots of people lack the knowledge or they missed out to pay tax under RCM. So you need to be careful. If any service you have received from the government, then make sure you pay the tax under RCM and claim ITC. Director service. For director service, there is a simple check. Just check whether you are paying under 92B or not. TDS section for salary. If you are deducting TDS under 92B, no problem, no RCM. If you are not deducting, then you are liable to pay under RCM, pay it, claim ITC. Don't go for litigation and all. Security service, as we discussed, non-body corporate to body corporate. Renting of motor vehicle. Many of the entity have engaged some or other rent-a-cab operators for the purpose of employees transportation. If you have engaged, pay tax under RCM. Plus, no ITC. For rent-a-cab, ITC is specifically blocked, so you won't be eligible for ITC of the same. Renting of immovable property. This is a new addition, not applicable for 21-22. It is applicable for 22-23. If you are receiving expense in the nature of renting of immovable property, and it's been received from a person to a registered person for a residential dwelling. Sometimes some people, so for residential, now you will question why residential dwelling you are saying in a business line, because for municipality, it might be registered for residential purpose, but may be used for business purpose. If you are using for business purpose, then you are liable to pay under RCM. Even there may be a case where you are giving for employee is residing and you are paying the rent of that. So residential dwelling being paid by business entity. On that case also RCM applicable. But this renting of immovable property is not applicable in case of 21-22. This all need to be, renting of immovable property need to be taken care in 22-23 from 18 July. This has come newly under RCM. Then these are goods. I'm not going into detail of the goods. Now reporting, as we discussed, that inward supply we report in table 4G, and IETC is divided into two, unregistered and registered. Unregistered into 6C, 6D. Now registered you will get from GSTR 2A. Now what we have avail IETC and what we are reporting as tax outward, it's tax payable, it's always be equal is not the case. As I discussed, some of the ITC expenses are specifically blocked. Even though you are paying, you may not be eligible to claim ITC. That's why it is said that table 6 may be less than or equal to table 4G. And table 4 of GSTR. So table 4G of GSTR 9, table 4 of GSTR 2A, where we will, if in GSTR 2A, if it's a registered supply, it will come. And a similar way, what is shown in 2A, it's not the case, it will match with your ITC discharge. So that's why it is shown that even if it is shown, the tax discharge may be more than, and even ITC claim may be more than, because 2A only relate to registered and not unregistered. Now this is table 8. We discuss about how to be report ITC, about RCM reporting, and what are the things you need to do for the purpose of GSTR 9 and 9C. Now come the another table, table 8, which is basically a GSTR 2A reconciliation. Reconciliation of ITC avail in GSTR 3B. Now in this you have to do your reconciliation with 2A, and basically we divide our working of 2A into 3 parts. One which is match, one which is only in books, third which is only in portal. We do have a bifurcation in 3 parts. Now ITC which is match, okay. Match does not mean you can avail. Now this matching will be divided into further 2 parts, whether you are eligible to claim or it's an ineligible ITC. So ITC which is matching and eligible and avail, you will report in your table 8B. ITC which is ineligible, then you have to report in your table 8F. Now there may also be a case where ITC is ineligible but you have avail. Obviously ITC total availment need to be reported in table 8B. Ineligible and avail, then you have to reverse with DRC 03. But in case of ITC, you have the option in case of 9 and 9C that you can do the reversal through input tax credit. However, for output tax payable, you can do only through cash. Now ITC, which is matched, which is relates to 21-22, but avail in 22-23 next year, subsequent year, then it need to be reported in table 8C. Now there may also be a case which you have not avail, you missed out, then table 8E. So this is the 5 table where it's need to be reported. Now I said about only of match. Now there may be a case of only in portal. Now only in portal means either that expense may have been expense of, or it may be a case of ineligible. So if it is a case of ineligible, then table 8F. But if it's a case of missed out, then table 8E, you need to report. Coming to only in books, which is not there in GSTR 2A, it will nowhere come in table 8. That reporting will nowhere need to be reported in table 8, because it's a 2A versus 3B, not 2A versus, though we take the books data and do the reconciliation, but which is only in books, that does not form part of table 8. So this is the summary point of ITC, what we discussed. As we said in the starting only for ITC, that you can't avail any ITC. So you can't correct in your GSTR 9. No availment is allowed by way of GSTR 9. If you have avail ineligible credit, then you need to report it as as ITC avail. You can't say that it's a ineligible, so I will reduce it. While doing table 6, if you remember, we were correlating it with your GSTR 3B, table 4. So your table 6 should match with table 4, even though you have avail ineligible ITC. So what you will do, if you have avail ineligible ITC, which you have forgot to reverse or missed out to reverse, then table 6 will be as it is. In table 7, whichever row applicable to you, other show it in other reversal, do the reversal. Though your net ITC may not match with tables GSTR 3B now, due to reversal will get increased and discharge it through DRC03. But you can't change table 6. Table 6 of ITC availment will match with your GSTR 3B. At table 6, you can't do the correction. You neither can reduce it, you can't neither increase it. Now, excess avail ITC reversed in 21-20. If you have reversed in the same year, so obviously, if you have shown net, so table 6 is having net figure. If you have shown by way of reversal of table 4B, then it's forming part of table 7. So automatically it will be taken care. Now, credit which has been short avail in 21-22 and avail in 22-23. As we were discussing, there is a part 5 of GSTR 9 which deals with current year, whatever adjustment taken forward in subsequent year. So ITC availment or reversal, which you have done in 22-23 in relation to 21-22 will be reported. Now, table 12 and 13, you will do the reporting, plus in table 8, if you remember, we have also said which is avail need to be reported in table 8C. Similar way, if there is a short availment, accordingly, table 12 will come into picture. Ineligible credit, not reverse. Though we are writing do not correct in GSTR 9, is you can not correct in 9 and in 9C in table 12 where we do ITC disclosure. Over there, by way of unreconciled, you can write that this much of ineligible ITC you have reverse. Reverse in 22-23 as discussed, table 12. Not reverse in 22-23 also, do not report. So if any ITC which you have avail and ineligible or which you are required to be reversed, if you haven't reported or missed out to be reported, then don't report it in GSTR 9. In 9C, by way of table 12, unreconciled ITC, and there you say you have paid through DRC03. So with this, we have come into the end of ITC and RCM. These are the further adjustments. So
Let's take questions on ITC before we move on. So point number 1, there was a question where 2A versus 8, there will be a difference. There cannot be a difference between 2A versus 8. The table 8 is derivative of 2A. In 2A, when you download, you have reverse charge as no. That cannot be forming part of 8. In 2A, you have another point as your place of supply not belonging to your state. Again, it will not be applicable. So that way, the 2A is a derivative and you definitely have to, it will be matching. So Girish, to answer your question, it case to case is what I have to see. Ashika, I think you have to swap from the presentation mode to the slideshow on the 3 dots below the screen. Yeah, maybe you can use that. Huh? Yeah. Then ITC relating to 21-22 claimed in 22-23 and reversed due to ineligible where you have to report. So Bhimraju, since it is there in 2A, it will be there in 8A. So in 8A, the value has come. You didn't avail in 21-22, so it's not part of 6B, hence it is not part of 8B. Since it is availed in subsequent year, it will be forming part of 8C. In the next year, you would be showing it as availment and reversal. So it will be shown both in table 12 and the table 13. and 8C of GSTR 9. Hope this answers your question. Any other questions to any participants before we move to the last leg of the today's GSTR 9 reporting? What do we do 2021 ITC, which we have availed in 21-22? Very good question. It's just that I don't want to address someone as Redmi K20 Pro. I would only request participants to rename yourself. Otherwise, it look very odd if I say, hey Redmi. So, but however, the question answer to it is, it could be in two folds. Point number one, by the way, the government has not given any SOP, circular clarification in doing this. The point here is, if you have a credit of the previous financial year which you have availed during the year, where do I report? It should go to table 6. Now, because the definition of input tax credit is the credit that you have availed in electronic credit ledger. If you are reporting it in table 6, which is say 6B, it would be forming part of 8B. However, it is not there in 8A. And for those who don't know these table numbers, it may sound a little weird, but make notes of it. Given that it is there in 8B and not in 8A, 8D will be showing as negative, indicating that you have availed credit more than what you are eligible for. So we recommend, if you have a value of 8C in the previous financial year, it has to be a negative value of 8C in the current financial year. That is option 1. The option 2, again, there is another school of thought. We have 6M, any other ITC. Again, you got to make note of these table numbers. Instead of reporting under 6B, see, I'm reporting under table 6. I'm not changing the reporting. I am, instead of reporting under 6B, I'll be reporting under 6M. So I have split the previous year ITC from a 6B to 6M. Automatically, your 8B is a lower value. 8B is correlating to value which is there 8A. Between both of the thing, which option do I suggest? I suggest anything is fine as long as you have working papers. In fact, again, morning while I was reviewing an annual return which a client has prepared, I was clear, I was explicitly saying the 8A, you can download it in Excel. Next to 8A, please mark how much of it in 8B, how much of it is 8C, how much of it is 8D and 8E, 8D and 8F, mark them. Put a pivot. It's pretty simple and easy for you to do the computation. Yeah. So hope, Prashant, this answers your question. Deepak is asking whether we need to report 21-22 ITC populated in 22-23. Of course, Deepak, since you have availed, I'm presuming that you have availed in 22-23. Since you have availed in 22-23, in 21-22, ITC has popped up in 8A. You didn't avail it, so you have to report it under 8C. Second, in table 13, which is an information table, you only have to report so much credit I have availed in the subsequent period. So this will get reported in 8C and table number 13. All right, so we have addressed all the questions. I think we can move forward. Yes, Ashika.
Now, this GSTR 9 adjustment is basically a summary of all we discussed in relation to outward, inward. So now how you will do the final check? Your books turnover, like Jagadeesh explained, multi-level dimensional reconciliation you need to do. It's very important to do all those reconciliation because everything will have impact. Rate error if you have done, type of supply error even if you have done, all those will have a very big impact. Anything which you have classified as exempt, though not exempted. So you need to be very much careful while doing GSTR 99C. You check your turnover so that even if anything has been missed out to be reported or any tax liability missed out to be discharged is been discharged. Even your 99C work in case of excess payment as for refund application. While filing on 99C, if you find out that you have made an excess payment, on that basis also you can go for refund, provided you have to prove it same to the satisfaction of the department. Now, like table 4, we discussed that it's an outward liability, outward tax payable detail we fully give over there. Then come table 10 and 11. Like while discussing ITC, you will notice I was every time saying table 12, table 13, table 12, table 13. For impact of 21, 22, carry forward or which has been shown in 22, 23. Similar way for outward also, if any amendment, credit note, debit note, B2B invoice, B2C invoices, or anything which you have relates to 21, 22 has been shown in 22, 23, need to be reported by way of table 10 and 11. Increase in liability will be shown in table 10. Decrease in liability is need to be shown in table 11. So table 4, you will show what has been discharged, what has been paid. Then we'll show table 10 of what we are discharging in 22, 23. Table 11, what we have by which we have reduced in 22, 23. If any, after taking all this impact, after taking what paid, what carry forward or brought forward, all plus minus, if any liability is found to be short paid, you need to discharge through DRC03. If you find out there is an excess payment, then option is upon you. As I said, GSTR 3B is summary written. Nobody can find out what happened. It's upon you how you are representing it. So if there is an excess payment, you can either go for refund or you can do subsequent adjustment. But while doing subsequent adjustment, you need to be very much careful. What you are saying, your documents or data should also represent the same. Another thing, if it's a multi-GSTN, then one more thing you have to be careful is your multi-GSTN, because when we prepare balance sheet, we prepare on a consolidated basis. So if you have a multi-GSTN, it's better you prepare also a standalone balance sheet for the purpose of GST, so that total of that GSTN, when you do, it should match with your consolidated balance sheet. Then for GSTN wise, you write what's the taxable, what the exempt you are showing. And as we discuss about 10 and 11, that GSTN wise reporting you have to do. And this all adjustment, what you are doing GSTN wise, you have to consolidate and match with your consolidated audited balance sheet. If there is any discrepancy, look for it and take the action. This is same thing. The only thing is that November 22, as we have discussed in our last session and last to last session, that November 22 was the time limit extended, where for 21-22, if anything you have missed out for availment or short payment of tax, you can correct it by November 22. If you have done that, then it will go by way of table 10, 11, 12, 13. That is a part 5 of GSTR 9. If you have missed out, then the only option left with you is DRC03. So final turnover, table 4 plus 10 minus 11. Tax payable we show in table 9 and table 14. Taxes which paid is also shown in table 9 and table 14 is for ITC detail. Liability and tax payment data flow. These are all check. If you do all this check, you are making sure your 99C reconciliation is properly taken care. So as we discussed, table 4, this is in relation to your outward liability. So your table 4, which has been paid during the year, which you are saying I have paid in 22-23, less which you are saying of credit note or any amendment of which by which you are reducing your tax liability in table 11. What this liability 1 comes. Now table 9, table 4 we show what's my GST payable. Table 9 we show how we have discharged that GST payable. Then if by way of table 10 and 11, what we are saying carry forward is been reported at table 14 of GSTR 9. Then tax is paid. Table 9, as we discussed, is a tax payable showing how it has been discharged at table 14.3. So this all comparison when you will do, you will come to know is any while doing, if you are getting differences, that will serve as your check to be sure that you are doing some error or not. Not the liability which you are calculating of your outward liability. So will you like to explain?
Yeah, so what you are seeing there is liability 1 not equal to liability 2 not equal to liability 3, which means in the table 4, whatever is tax payable, you should be having in table 9 as tax payable. And table 10 and 11 tax payable should be there in table 14 as tax payable. If the tax payable and the tax paid is not matching, make sure this is representing through at DRC03. Likewise, there was a question that came up is, can it be on input tax credit? Yes, input tax credit also you can reverse it. Make sure there is a DRC03. So DRC03 can be before filing of R9 or after filing. So there is only one relaxation. Even though when I say statement of the fact, sometimes you can file your R9 and file your DRC03, but the point is DRC03 should be there while you're doing the audit, which is happening. Yeah, I think someone has raised the hand. Okay, yeah, it is done, no problem. Yes, we can continue. And table 17 validation, when you're doing, make sure the value that you reported in table 4, 5, 10, and 11 should match. The points that you will be excluding is advances, since your 4F, you haven't frozen the supply, your 4G, it is inward related, 5F, which is a non-GST supply, exclude that. Next. 8C, which you are reporting in GSTR 9, table 8, should be lower than or equal to table 13, because this is the ITC which has been claimed between April 22 to September 22. And you got to have a checkpoint that, okay, this is lower than that. Next one. Couple of the reporting changes that have happened, which so quickly, though we have discussed, 5D, 5E is now can be merged, but 5F you have to mandatorily report it separately. Then when it comes to your table 17, earlier it was exempted not to report, but you have to report it. Table 18, it continued to remain optional. In 9C, again, while turnover discussion, this we have discussed, make sure there is a correlation between the turnover that you are reporting. The gross turnover in 9C should be your 5N and the 10 and 11. Taxable turnover, it is 4N minus 4G plus 10 and 11. That means the table 10 and 11, you will only have taxable turnover. You will not have exempted turnover in table 10 and 11. The tax payable, the total taxes that you have paid is table 9 plus table 10 minus table 11. Whatever the value which is there in table 10 and 11, it means you are borrowing the taxes of the future that you have already paid in the next year, that you are offsetting it. Input tax credit, when you are seeing the input tax credit, you got to know that there's a 12E, which is the like 12F is the unreconciled item. It is deriving out of the two parts. What is there in the books. Next, how much you are taking credit in next year, you eliminate. How much of the previous year you brought forward, you will add it. That you are comparing with what is there in books of accounts. The difference is in 12F. Expense-wise ITC, Ashika clearly said, please segregate your purchases with payment, without payment. And this value, I think someone was asking, what should I report in table 14? Everything you will be reporting, whether it is eligible or not eligible. The total ITC in table 14, column 3, what is eligible and availed will be in 14.4. Some other points, just a reiteration, you might have issue with how do I deal with the excess taxes that I have paid in 3B, or short taxes have paid, the taxes correctly paid, but the turnover wrongly reported, or turnover correctly reported, but there is an interchange. All these points will be a discussion point for 9C, but not 9. 9 is not a place. If you are doing a new discovery of taxes, you cannot make a new taxes through R9, or you cannot make a refund claim. You can neither avail an ITC which you missed out, nor reverse an ITC that you have excess avail. R9 is not a place of new discovery. R9 is a place of statement of fact. What happened is what you will be reporting. So you cannot use R9 for paying taxes, claiming refund, availing ITC or reversing ITC. You will do it in 3RC03 and that is what you will be reporting here. With this, we have come to end of the theory session. We will quickly move to the tech aspect of it. But before that, any questions to any participants? You can put in the chat as no. I'll be happy. I'll take up the next part. Are there any questions? Whether table 10 and 11 sales liability can be paid through electronic credit ledger in the tax paid table 14? Of course, yes. It is like just that you will be only if the taxes are paid in the next year is when you will be reporting. If in the next year 3B between April to November, if you have not paid any taxes, that would not be forming part of table 10 and 11. No, Deepak, hope this answers your question. Again, question from Redemi. What we shows in 9C 12A column. 9C 12A column is coming from the books of accounts. So what is the value in the books of accounts is what you will be reporting here. So let me just go back. Yeah, so ITC availed as per the signed financials will be coming there. All right, any other questions? Okay. So we will move to the next part of our discussion, which is let me share my screen. Okay, to the participants, I have shared a couple of Excel files. Have you downloaded? Did you get it? One second. The file 1, file 2, and there was a file 3. Totally, we had 3 files that is shared. Hope you got these files. We'll go one by one. Have everyone downloaded these files? Deepak asking, please explain table 13. Table 13 is very clear. Again, when you're asking, please put the table form. I'm guessing it is R9 of table 13. Again, questions when you're putting, please put everyone so that everyone will get an idea of the questions. Table 13 of R9 is the credits that you have availed in the subsequent period. I have made the purchase, but I have availed it as a credit in the next year. So it's an indication that I have deferred some credit. The primary difference between liability and the credit, liability means whether you pay it or not, it will be 10 years later, it will be a liability of 21-22. ITC means even though you have purchase invoice, even though it is there in 2A, even though you have received the books, you have satisfied all the conditions of section 16, unless you report in your GSTR 3B and recording it into your electronic credit ledger, it will not be ITC. That is what about it. Which table values will come to table 9C 12E from GSTR 9? Bhimraju, 7J of GSTR 9 will be coming to 12E. So 7J, I think we have yeah, so hope you can see this. Yeah, again, pardon me. Since I deal with day in, day out subject, I know the table numbers and their subtables. So I'm talking for you. Some of you, it might be a new, but you got to know this. You have to ensure you put the right values. Kirtana is saying, I did not receive the files. These files were shared in the chat. You can go to the chat window and download Kirtana. Have you guys got the files? How many have you downloaded these files? Can you just put it as yes if you have downloaded? Oh, Girish says yes. Prahlad says yes. Jagdish says yes. Jairam Raju no. Sunita no. Sai yes. Deepak yes. Bhim Raju not received. I think I'm not sure if at least 10 people got it. This is the software. Software works the same for everyone. Let me do one thing. Let me give you a URL. Don't work on this URL as such. Download this as a file. Download this as a file. Those who have downloaded, please don't click on this URL. You don't need to have it. All right. Okay, let us start with this. Satish says I have 3 files. It's perfect. Very good. Let us start with that. Please open Tally. Okay, I've just opened some Tally. Okay, it could be any Tally data. Just please open one Tally data and open the first file, debtors and creditors. Open the first file called debtors and creditors. And just in case if someone has not received, absolutely don't worry. You can just follow my screen. We will also email you. And those who have got it, open the file, open the Excel file, open the Tally data. You don't need to do anything. This file will not work if you are using a pirated Excel, if you are using an Excel earlier to Office 2016. If you are using Office 365 or 2016 and above, this file would work. Okay. Now, in the Tally list, you can just select this Tally and you just right click. You can just select right. Okay, by the way, I just forgot to make an emoji. So in version 1.4, I have the multi companies have already been looped. No problem. I can just come to my outstanding. Let's come directly to the outstanding. Please come to this sheet called outstanding. Open debtors and creditors file. Go to sheet outstanding. Have Tally data be opened. Have Tally data be opened, right? So any Tally data. Once you come here, just select in somewhere in the data, right click on the data, hit this refresh button. For some of you, you might get a question that, okay, private, accept, public, all this. You select the ignore button and accept. You may see this data I have, sorry. This data I have around 28,000 vouchers. In just a fraction of it, I have got huge values automatically. All right. Now, after you get this data, there is something called outstanding days and age. There's a formula which I have written in the first 2 cells. You can just copy this formula and go to the end, Control Shift and just paste it. Copy this formula, go to the end and paste it. Come to the aging report pivot. Come to the aging report, I'll say pivot. Right click, refresh. Right, so you have all the data here. Now, if you have multiple companies open, company-wise, you'll be getting it. Now, what is the advantage of it? Click sundry creditors. You get list of creditors. Click sundry creditors. You will get list of creditors. And especially look for these 2 values. Where the aging is beyond 180 days. You got to reverse the input tax credit. You got to reverse the input tax credit. Take a look at it, why this is beyond 180 days and why it has not been paid. Will this work for Tally Prime? Yes, Girish, it works for any version above 6.6.3. So Tally 7, 8, ERP 9, Tally Prime, this would work. Don't worry. The second, click on debtors. very important, even the debtors, because in GST, bad debt is not a reason for revising a credit note. Point number two, if there is a credit note, you got to report it by 30th November next year. So if I know there are old bills lying, as an accountant, you can always quickly say that, hey, look, if there is a credit note that needs to be, because the sales people with the pressure from the management, they get an invoice be raised without making a supply of goods or services. You got to make a timely attempt to get the amounts cleared, right? So this has been created to ensure that you have both the outstanding more than 180 days handy. The only point for you to have this worked, make sure that the bill wise is activated in the tally. All that I do, simple steps, open tally, right click here, hit the refresh button, select the outstanding days, the formula, copy till the end, refresh your pivot, things would work automatically. So anyone had any doubt in this? Did it work for you guys? Anyone, any doubt? So that let me go to the second part. You got to be little speaking, you got to be little expressive. All right. For some of you, it might be asking ODBC login credentials. If it is asking, there might be little older version of the Excel. You can just enter the tally username password, it will work. You can enter the tally username password. So whatever is the username password that you have created in the tally, use that, it would work. The next one is ledger vouchers. I'm just again, so here, now let me go to the balance sheet, current liabilities, duties and taxes, GST. I have these ledgers, input CGST, IGST, and SGST. I want to understand for the financial year. So someone asking a little bit about 9C, 12B. Okay, I'll come back to that. So someone, you have to prepare table 14, table 12 of 9C. How do I prepare? Or I have to do a reconciliation. How do I get the data? So in your ledger input, whatever is the ledgers in the tally, whatever is the ledgers which are there in the tally, in the ledger input, whatever the ledgers that are there in the tally, with these input ledgers, you will know in your books of accounts what is the name. You get that, and come to the ledger, which are the ledgers you want to process and which period. Let's say from April 21 to 31st March 2022, I want to process it. Okay, I am giving my date. I come to my ledger vouchers. I just right click on it and hit my refresh button. You can see it will say it is running a query in the background. But what it is doing is it is extracting all the information that is relating to my purchases where the GST amount is present. It is extracting all the data of purchases. Again, this is last year, there's a huge number of data. Again, this magically, I didn't do anything. I just here and system has extracted. You can, this is again, we are good with the pivots. You can just insert a pivot to this and you can quickly, in fact, you can do multiple things. Let's say ignore or consider. Is there any vouchers I should ignore or consider? Ideally, you will be posting some entries to the electronic credit ledger, right? So if you have anything of this balance, you might want to check whether you want to ignore or consider. Yeah, these electronic credit ledgers. And yeah, let's say these I want to ignore. These entries I want to ignore. Here I'm just doing the simple Excel, and I want to consider the balance. And by the way, whenever you are seeing a data that's coming from tally, if it is minus means it is debit, if it is plus means it is credit. So let's see the table name for this. The table name is final table is what I have given. So in my pivot table, I'll just use this data in the pivot table. I will use the data source as the final table, so that whenever I'm changing the table, automatically everything comes. So ignore or consider, I want to have consider items, and I would like to have by particulars and the net amount that I'm claiming. In fact, your net amount also, since now given that we have given it as a table, in the table you can just amend that. Let me go to the ledger vouchers. Sorry. I can just include one more called net ITC. I'll use another thing called net ITC, and the system is little slow. Let me close other applications. All right. So net ITC, I can just say debit minus credit. In my pivot, I will just say instead of this, let me get my net ITC. Now you can automatically see you got party wise ITC. You got party wise ITC. You might ask that, okay, can I get expenditure wise? You can get, let's say these are the people, and let's say I just want to group, I want to group this party name and expense name. Okay, now you can say this is purchase. This is a one-time activity. Since it is your books of accounts, you know it, you can easily do it, right? I can just, I put, let me just, for the sake of ease of our understanding, I'll just put, so this is purchase, I'll say traveling and conveyance, this is telephone bill, I'll say advertisements, rent, marketing, staff welfare, internet, repairs and maintenance, communication charges, office maintenance, fixed assets. We've just given some random information, right? So let's say this as my vendor expense map. let's say this is my vendor expense map. In my ledger vouchers, I can always say expense name. And we look up of this party particulars in my vendor expenditure, right? So in my pivot, I can just also get one view you get by vendor, the another view you get by expenditure. So you can always, people ask, how do I get the table 9C, table 14 entry? Now you can see in one go, you have got the expenditure wise. So you want vendor wise, you can get in the pivot, you just change it. You get vendor wise, you want expenditure wise, you get expenditure wise. You know, it's just a swap of things. You can easily get how you want information for your table 9C, table 14 of 9C. There are other things. There is party. Okay, there are people I have by party. Now, sometimes the data that has come, it was directly accounted in the ledger of expenditure. People have not posted which is the entry of it, right? Which party it is. So I have also shared, because since it is not routed through AAP module, you don't know the party, but from the narration or the bill reference, something the information of this is captured. So I've given you the other tool where you can get the vendor name. You can get the vendor name just by looking at the, let's see, where is the other one? Yeah. So there is validated GSTN ID. There's a third ledger. So if third Excel file, you can just copy paste the vendor name and hit this button called validate. It will automatically validate and check whether these are correct or not. And it is also giving me the whether it is a regular dealer, which state they belongs to, all that it is giving me. You want get GST details, you click this button called get GST details. It will connect to the government portal. You can actually see some, though system is slow, you can automatically see the data it is fetching data from some source that we don't need to be worried, but it is fetching the information from the government portal and saying that, yes, this is the name. You want the name of the vendor and you want the registration type and the address. All this information is automatically fetched. Yeah. So these are the 3 Excel tools that I said we will be showing you. And any doubts before I go to the cloud tool? Let's close. So there is a website, tallyonwheels.com. Here we go. This is a tool which we use it for preparing GSTR 9. I log into this tool, tallyonwheels.com, and I just need to connect the tally data. So there is automatically there's a connector which will automatically connect the data. Right now, how in the Excel Power Query that you have seen some data which got connected automatically. So even here, you have the tally data automatically synced to the government portal. And let me show you how this happens. Let me just connect to the tally. So I'm just opening one tally. Okay, here is one tally data for the financial year 21-22. I want to prepare GSTR 9. So as Jagadeesh was saying that to prepare GSTR 9, you need GSTR 1, 2B, 3B, next year 3B, and the books of accounts. The advantage of tool like this, so let me just create one small entity. Let's say demo December 17th. I'll just create, let me create one entity, demo December 17th. And yeah. So let me add the company. The moment I create this, you can automatically, right now I have not done add a tally company. It is automatically picking from the data which is here. It's automatically picking the data which is there here. I just say add. Okay, the data gets added. Now this has multiple options which I can do. I can prepare basically if you are doing internal audit, stat audit, tax audit, GSTR 9, it can prepare all the analytics and financial reports. Given that I'm interested in GSTR 99C, I will select this company and I'll say prepare GSTR 9 and 9C. I'll say prepare GSTR 9 and 9C. Whether this Excel has fetched all the information. Yeah, this was the tool it had fetched against the GST name. What is the legal name which is there? It has come. So with this, you can automatically get the missing information. That's full. Yeah. So for doing the GSTR 9 preparation, this tool will automatically download the data from the government portal. I'll say login using OTP, and I'll enter the OTP. Let's say request the OTP. Let's just get the OTP from the portal. Again, the magic when you are using the tools have an ability to process things much faster. So we have received the OTP. That's here is our, sorry. Here is our OTP. I'll say login with OTP. Now, the advantage on a fraction of like a few seconds and minutes. Now I've logged in the OTP. I just say click all, select all, and download from the government portal. I'm clicking this button, download from the government portal. So in a matter of time, it is going to download GSTR 9, table 8A related information, GSTR 1, all the different tax. You can see on the top, May has been downloaded, June has been downloaded. It's like it is completing the activities one by one itself. And as it is doing, I will also say upload the purchase register. I can automatically sync the data from tally. Earlier, we have seen the data using an Excel. Now I'm say, okay, use this company and the existing ledgers between April to 22, I'll say import the vouchers. It may take again some 3 to 5 minutes, but it is going to read all the, because we want to do for preparation of table 8C, 8D, what are my expenditure vouchers which have been reconciled, vendor wise not reconciled. It is going to analyze and give me full output. So it has downloaded the data from GSTR 1, downloaded the data from GSTR 3B, downloaded the data from GSTR 9 table 8A. Now it is downloading the data from tally And parallelly, it will also reconcile this with the my data, which is 2A or 2B, which has been downloaded from the government portal. So this it will be doing, and not just that. The advantage of the tool is it will give me what is the tentative GSTR 9 according to the tool. It should be the values, because various tables where Jagadeesh has explained, Ashika has explained what value has to go into which table. So all those connection to the different tables, this is going to prepare. And also, friends, it's already 5:29. I'll take another 10 minutes before we wind up. So yeah, so around 75% data has been processed. And put your questions, if you have any questions in the chat, put your questions in the chat. Girish is asking, GST and nature of supplier status is downloaded from GSTN portal or Tally. GSTN, the Excel file is downloading the GST number from the government portal and not from the Tally. That Excel file, Girish, it is downloading from the Tally. So it has verified. I'll say confirm and save the entries. It is importing the data into an Excel file. I'll say continue preparing my GSTR 9. One thing which you have to do is hit this button, run GSTR 9 matcher. This is very important. It is going to request the GSTR 9 matcher. That means it is going to prepare. It will take, again, a minute. It has done a matching and it prepared GSTR 9. Let's download the GSTR 9 for 21-22, which the system has prepared. It's like a fresh Tally data, fresh data from the government portal. So let's see what it has prepared. So it is opening a file. Perfect. So let's see what it has prepared. Now, so it has given us various sheets. Let me just close the. Okay. So there is a data which has come from the government portal, GSTR1 consolidated. Now I can see month wise, what is the data which is there from GSTR1 portal, it has downloaded. GSTR3B, what I have reported month on month in various tables of GSTR3B, it has extracted. And it also can give me GSTR1 by filing period. If I have missed out, like assuming in the month of July, my sales is 89 lakhs, All right. Sorry for the technical glitch. And this definitely happens once in a while. Yeah. So just to start back, I don't know where it left. So it has downloaded the data from the government portal. It has downloaded all the data from the government portal. It has done a reconciliation. In fact, someone was asking 2A, 8A is not matching. It also prepares the data, whether it is there in 8A and it is also there in 2A or not. And it gives me the information that so much is there in 2A, but not in 8A. In 8A, it is there, but it is eligible, ineligible, all those information it is also going to give. What is more important, which I'm interested in, is GSTR 9 working file. It is giving me a working file which I can fill GSTR 9. So some values it is preparing, especially where I said the credit notes, debit notes have to be reported. It is preparing all that information. And from where is it coming? It is coming from, everything is in Excel, it is a linked file. So it is giving me, hey, look, this is the value which is there in your GSTR 1. This is the value which is there in 3B. This is the value which is there in the books of accounts, because we have seen the books of accounts. It has coming data from the books of accounts. And this can be segregated GSTN wise. And let's say I have one more GST number in say state of Tamil Nadu, and I will say some 5 lakhs turnover in that state. So automatically you will, sorry, I have 5 lakhs turnover in that state. So you can start allocating and seeing what is the turnover for this state. So it has become from 790, you can see 794. This turnover has become 789 automatically. And this is the turnover. It is now computing that, okay, you have to match it for the purpose of reconciling. It is creating all the separate links and expecting what is the value that you need to report in the various things where you can do a data entry, and it is trying to compute whether any value has to go to table 10 or table 11. It has automatically computed, hey, look, 15,000 you have excess paid and 22,000 IGST you have short paid. It has done some computation and giving all those. So this tool is assisting us automatically prepare the GSTR 9, including the input tax credit related values and table 8 related. This is very critical. The table 8 related values, everything is extracted and presented. So when you use a tool, something like this, you will have an opportunity to get the information in much faster way, and you will get all the information in one go. So you can take a decision on how do you prepare GSTR 9 and 9C in a faster and in an informed way, right? So these are the 3 Excel tools and an automated tool using which you can prepare R9 that I wanted to demonstrate. If you have any questions, I'm here for some more time. Feel free to ask the question. Else, you can write to me. You will get to all the participants. You will get these Excel files and the PPT and the recorded version of it. You can also check and reach out to me for further questions. Any questions that were not answered in between since the session got disconnected? I couldn't see the questions in the chat, but if you have any questions that were not answered, you can put it. This tool takes directly data from Tally. Yes, it will automatically take the data from Tally. You don't need to upload any value in this.
Hello, sir.
Yes, Sachin.
Sir, I have one doubt.
Yes.
Actually, suppose my client turnover is around 3 crore and 9C is not applicable to them. Okay. In 21-22, the case means the issue was ITC reversal is more than ITC availed in particular year, means in 21-22. So GST portal is considering a difference amount in point number 9 of GSTR 9, means considering as output. So and 9C is not applicable. So how can I rectify the same?
You don't need to rectify. So in any month, not just for the year, in any month, where if the 4C is negative, it gets an impacted as if it gets added to the liability. That is where in table 9, tax payable and tax paid, you will have a difference. So whenever there is a tax payable, exactly the same value as a difference in table 4C, summation of GSTR 3B, and table 7G, the net value which you are availing, you will have both the differences exactly matching with 9 payable and 9 paid. You just need to have this reconciliation and explain it to the officer if there is any query that rises. But otherwise, that's perfectly fine. You don't need to do anything.
Okay, sir. Thank you.
Whether penalty is applicable both for 9 and 9C separately, yeah. So for GSTR 9, there is a late fee. For 9C, there is no late fee specified. So non-filing may invoke the penalty. Deepak, I have reduced exempted sales auto-populated in GSTR 9. Can I do so? Yes, you can. You can increase, decrease. If you have erroneously reported in table 8 of R1, you can correct it in R9. Any other questions? Can you share the demo Excel file of R9 for reference because we are using SAP? Yes, Girish, what I'll do is I will send you the demo R9 file also. You can use it for the SAP purpose. I get your point. You can feel free to write to us. Okay. With this, we have come to end of the session. I thank each and everyone for taking your time out. And in the next month, we will come back with what are the to-do list for the participants in the new year coming up. So, which we will look at what are the new changes, because we are going to very soon hit the 50. We are going to celebrate GST Council 50th Council meeting. 48 Council meetings happened. So we will look at the changes that are going to come up in that, and some more Excel related applications for the finance professionals. With this, if there are any questions and answers, please write to us. We'll take care of it. I thank each and everyone, and especially Ashika and Jagadeesh for preparing such a beautiful presentation and taking all of us through how we have to report it. Yeah. Thank you.